$74 billion. That was the value that disappeared when Enron collapsed. But this story was not just about a company going bankrupt. It was about a company that looked powerful, looked profitable, looked unstoppable, while hiding the truth underneath. Enron told the world it was innovative. It told investors it was growing. It told employees the future was bright. But behind that image was a lie. And when that lie broke, one of the biggest corporate scandals in history exploded into public view. Enron did not collapse in one day. It collapsed after years of manipulation, pressure, image management, and hidden risk. And by the time the truth came out, employees lost retirement savings, investors were wiped out, and one of the most admired companies in America became a symbol of corporate fraud. So how did Enron look so successful for so long? And what was really hiding underneath that $74 billion story? To understand that, you have to start with the image Enron sold to the world. Enron was once treated like a modern American success story. The company started as an energy business, but over time it repositioned itself as something bigger, smarter, and more exciting. It did not want to be seen as just another pipeline company. It wanted to be seen as a sophisticated trading giant, a modern machine, a company that understood the future before everyone else. And for a while, people believed it. Wall Street loved the growth story. The media loved the innovation story. Employees believed they were working at one of the most important companies in America. The stock price kept rising. Confidence kept rising. The image kept getting stronger. From the outside, Enron looked like exactly the kind of company everyone wanted to believe in. That image mattered. Because the stronger the image became, the easier it was to hide what was happening behind it. Enron was under pressure to keep looking impressive. Not just good, impressive. The market wanted growth. Analysts wanted strong results. Executives wanted the stock price high. And the company kept pushing to meet those expectations. That is where the danger started. Because when a company becomes addicted to the appearance of success, the temptation grows. Not to improve the business, but to protect the image. And once protecting the image becomes the goal, bad decisions start to pile up. Enron used accounting structures and off-the-books arrangements that made the company look healthier than it really was. Instead of letting weakness show, it pushed problems out of sight. Instead of letting investors see the real risk, it helped create a cleaner, stronger-looking story. Instead of saying, "We have serious problems," the company kept feeding the market confidence. That is why Enron became so dangerous. Not because one bad quarter happened, not because one project failed, but because the company was building a gap between what people were told and what was actually true. And the bigger that gap got, the more fragile the whole thing became. This is what made the Enron story different from a normal business decline. A struggling company can survive bad conditions. A company built on image and hidden weakness becomes vulnerable the second trust breaks. And trust was everything. Investors trusted the numbers. Employees trusted the leadership. The market trusted the story. But what happens when the story is stronger than the business? Eventually, reality catches up. Enron used complex structures to move debt and risk away from where investors could easily see it. That mattered because debt changes how strong a company really is. A company can look impressive on the surface, but if the hidden obligations underneath are heavy enough, the picture is false. And false pictures can survive only as long as people keep believing them. This is one of the biggest lessons in the whole scandal. A company does not always collapse because the outside world suddenly attacks it. Sometimes it collapses because it spent too long hiding the truth from the outside world, and eventually that truth becomes impossible to contain. That is what happened here. Enron had helped build a public image that suggested control, intelligence, and momentum. But underneath that image, risk was piling up. Weakness was piling up. Pressure was piling up. And once a company reaches that point, every new quarter becomes more dangerous. Because now the company is not just trying to perform, it is trying to keep the illusion alive. That changes everything. Now the company is not managing a business. It is managing perception. And perception is expensive. To maintain it, you need more explanations, more complexity, more ways to delay recognition, more ways to avoid letting people see what is really happening. That is why corporate fraud stories often become so tangled. The complexity is not always a sign of strength. Sometimes the complexity is the hiding place. Enron's image remained powerful for a long time, and that created a deep psychological effect. When a company is praised enough, people stop questioning it as hard. Success itself becomes a shield. That shield makes investors more comfortable. It makes employees more loyal. It makes outsiders assume the company must know what it is doing. And when that happens, warning signs become easier to ignore. This is the psychology of the collapse. People did not just believe Enron because of one statement or one press release. They believed because the company looked like the future. It sounded intelligent. It was respected. It appeared to be winning. That combination is powerful, because people are much more willing to trust a lie when the lie is wrapped inside prestige. That is why the betrayal ran so deep. Employees were not just watching headlines from a distance. Many of them had real exposure to the company. They believed in the leadership. They believed in the future. They believed the company was worth trusting. And when the collapse came, the damage was not abstract. Retirement savings were hit. Careers were shattered. Confidence was destroyed. The human side of this story is what makes it so brutal. It is one thing for a stock chart to collapse. It is another thing for workers to realize the company they believed in was hiding the truth while they stayed exposed. That is where the word betrayal fits. Because this was not just a failed strategy. It was a collapse of trust. The market can forgive mistakes. It is much harsher on deception. Once serious questions about Enron's finances gained traction, the confidence holding the whole structure together started to break. And once confidence starts breaking in a story like this, the fall can move fast. Because people begin asking different questions. Not, how high can this go, but, what else is hidden? That shift is deadly. The moment trust flips, everything starts working in reverse. The strong image stops protecting you. Now it becomes evidence of how much people were misled. The growth story stops helping you. Now it becomes something people re-examine. The complexity stops sounding impressive. Now it sounds suspicious. That is the tipping point. And once Enron reached that point, the collapse accelerated. The company filed for bankruptcy in late 2001, marking one of the most infamous corporate implosions in American history. What had once looked like a symbol of modern business success became a symbol of fraud, weak oversight, and catastrophic leadership failure. The fallout did not stop with Enron itself. The scandal damaged trust far beyond one company. It increased scrutiny on accounting, corporate governance, executive behavior, and the systems that were supposed to protect investors. Because if a company this admired could be hiding so much, what did that say about the rest of the system? That question mattered then, and it still matters now. Enron is not remembered just because it failed. It is remembered because it looked safe before it failed. Because it looked successful before it failed. Because so many people trusted it before it failed. That is what makes the story sticky. The danger was not obvious enough early on to stop belief. And by the time the truth was visible, the damage was already severe. That is the pattern people should remember. The biggest business disasters often do not begin with a dramatic explosion. They begin with a story that people want to believe. A clean story. A winning story. A story that makes doubt feel unnecessary. Then the gap between story and reality widens. Pressure builds. The truth gets pushed further away. and one day the whole structure cannot carry the weight anymore. That is the real warning from Enron. If a company becomes obsessed with protecting the appearance of success, it can start sacrificing reality to maintain confidence. And when confidence depends on hiding reality, collapse is no longer a distant possibility. It becomes part of the design. That is why Enron still matters. Not just as history, not just as scandal, but as a case study in what happens when image outruns truth, when complexity hides weakness, and when leadership protects perception instead of reality. Enron was not just a company that failed. It was a company that taught the world how dangerous it is when trust is built on numbers that do not tell the full truth. And in the end, that's why this was not just a $74 billion collapse. It was a $74 billion lie. If you want more breakdowns on corporate fraud, collapse, and business failure, subscribe and watch the next case study on the channel.